The world's second largest economy, China, is in the middle of a property crisis which is showing no signs of abating. The crisis that began with Evergrande real estate defaulting last year is now snowballing into a bigger crisis.
Another financial crisis is brewing in China, but the world knows very little about it. As we speak, a boycott campaign is underway in at least 86 Chinese cities.
Well, there are fresh signs of trouble for China's embattled property sector. Not only are home buyers refusing to pay their mortgages,
the global economy is at risk as China's housing markets collapse. What does the freefall in this property market mean, and what are its consequences? China's property market is in the midst of a slow-moving crisis. Real estate prices have plummeted as authorities seek to rein in unsustainable debt and market speculation. In a rare act of defiance, people across the country who bought a property from indebted developers are refusing to repay loans on their unfinished apartments. For decades, buying property was considered a safe investment in China. Now, instead of building a foundation of wealth for the country's middle class, real estate has become a source of discontent and anger. Let's find out about this crisis in detail. But before we dive in, just a reminder that we have a bonus fact for you towards the end of the video, so stay tuned. With that out of the way, let's get into it. What is happening with the people of China right now? The boycotts are part of the fallout from a worsening Chinese economy, slowed by COVID lockdowns, travel restrictions, and wavering confidence in the government. The country's economy is on the path for its slowest growth in decades. Its factories are selling less to the world, and its consumers are spending less at home. The government said youth unemployment has reached a record high. Compounding these financial setbacks are the troubles of a particularly vulnerable sector, which is, you guessed it, real estate. Life is extremely difficult, and we can no longer afford the monthly mortgage, homeowners in China's central Hunan province wrote in a letter to local officials in July. We have to take risks out of desperation and follow the path of a mortgage strike. When a rural bank froze withdrawals in Hunan province in central China, it set off a violent showdown between depositors and security forces. Recent college graduates are struggling to find work with youth unemployment at 20%. Small businesses, the biggest provider of jobs, are fighting to survive under the constant threat of COVID-19 lockdowns. It's safe to say the struggle is real and much worse than we think. Imagine not having the means to afford a bare minimum. Now that's something anyone would rebel for. In more than 100 cities across China, hundreds of thousands of Chinese homeowners are banding together and refusing to repay loans on unfinished properties. One of the most widespread acts of public defiance in a country where even minor protests are quelled. To date, more than 300 groups of homeowners are believed to be refusing to pay between $150 billion or 127 billion pounds and $370 billion in home loans, according to informal surveys published online. Now, this might seem a bit too much for you, but we have to keep in mind the people of China have been barely scraping by. Recently, Chinese Premier Li Keqiang visited the southern technology hub city of Shenzhen and urged a heightened sense of urgency for an economic recovery. But the property sector presents a unique set of challenges, and the people of China are in too much distress to care about the consequences. Why did it come to this? Real estate drives about 1/3 of China's economic activity. By some estimates, and housing accounts for about 70% of household wealth, making it the most important investment for most Chinese people. The one thing all these protesters have in common is that they have been paying mortgages, often at a rate of 5% to 6% on homes they have never lived in. These properties were sold before they were built under what's called the pre-sale system, which is a common way to buy property in China. Under the pre-sale system, buyers deposit money in an account before the property is built. Chinese banks and local authorities are obligated to monitor developers' use of these funds. Developers are not supposed to have access to all of the money until they have hit certain pre-agreed milestones during the building process. The triggers for the buyers' strikes is a widespread belief among these protesters that the funds homeowners have paid in advance to the builders of these property developments have been misused. In an effort to rein in the highly indebted property development sector, the Chinese government enacted a 3 red lines rule in 2020 to regulate the leverage taken on by developers, limiting their borrowing based on the following metrics: debt to cash, debt to equity, and debt to assets. Evergrande was considered by many analysts as too big to fail. A Lehman Brothers-style collapse would have massive consequences on the Chinese economy and the world at large. The new regulations greatly affected Evergrande, which had leveraged itself heavily in the preceding years. Other central and local government regulations, including mortgage lending limits, rent caps in big cities, and land auction cancellations, precipitated a slowdown in the property sector in 2021 as authorities attempted to control rising house prices. By the 8th of October 2021, 14 of China's 30 biggest developers had violated the regulations at least once. Buyers complained that many banks, whether or not local authorities are aware is unclear, have been providing loans to developers before the required stage of work has been reached and refused to pay their loans. The move created a cash crunch for many firms that had relied on easy access to debt to keep construction projects humming. As financial strain deepened, Evergrande and other large property developers spiraled into default, and the impact rippled across the industry. Last month, hundreds of companies that provide services and supplies to the property sector, such as construction firms and landscapers, issued a joint statement to government authorities, saying they were facing a crisis of survival because they hadn't been paid for months. What are the consequences of this rebellion? The mortgage rebellions have roiled a property market facing the fallout from a decades-long housing bubble. It has also created unwanted complications for President Xi Jinping, who is expected to coast to a third term as party leader later this year on a message of social stability and continued prosperity in China. So far, the government has scrambled to limit the attention garnered by the boycotts. After an initial flurry of mortgage strike notices went viral on social media, the government's internet censors kicked into action. But the influence of strikes has already begun to spread. The number of properties where collectives of homeowners have started or threatened to boycott has reached 326 nationwide, according to a crowdsourced list titled We Need Home on GitHub, an online repository. ANZ Research estimates that the boycott could affect about $222 billion of home loans sitting on bank balance sheets, or roughly 4% of outstanding mortgages. Any momentum behind the mortgage strikes would add to a growing number of economic issues facing the Chinese Communist Party. China's social credit system punishes infractions, such as failure to repay loans by limiting an individual's ability to travel, get their children into school, or borrow from banks in the future. However, the homeowners said those risks did not outweigh a threat to their survival and that people are desperate. The credit system is nothing but a piece of paper that they can easily dispose of. Homeowners of a partly built apartment complex in the central Chinese city of Zhengzhou have compared themselves to Rickshaw Boy or Camel Zhengji, a tragic character in Chinese literature whose dream is to own a rickshaw of his own, which is thwarted by corruption and dishonesty. We as thousands of Zhengjis must throw away those shackles and let those who robbed us of money and smashed our cars know that Zhengji is no longer the lamb who is slaughtered by others, the homeowners wrote in a notice last month to local banks and government officials. If the developers do not finish building, all owners will forcibly stop repaying the loans. At the end of August, they wrote. Can China overcome this crisis? What is currently needed is a backstop to the self-fulfilling crisis that is the belief that property developers will be insolvent, which impels buyers to hold off their purchases and financing to dry up. Some monetary easing and relaxation in the mortgage market is not enough. Stimulating demand by loosening mortgage lending won't solve the problem, and a proposed bailout package will probably not move the needle. The government would need to offer much more relief to property developers despite their past unscrupulous behavior. To break the cycle, the government will need to send a much stronger message and instill confidence. The short-term pressure on the Chinese economy is real, but China is not about to experience a severe housing crisis. For one, Chinese households historically have very high rates of savings, which should allow them to address interest payments relatively easily. This is not a situation like in the US or Europe in 2008, which saw highly indebted homeowners unable to make their basic payments. Major banks are state-owned and will not be allowed to fail. There are no complex, opaque chains of intermediation that characterize the Western banking system. Foreign creditors to Chinese property developers will have to take a massive haircut, but the ripple effect on the international economy is likely to be limited. In the last decade, local government zeal has rapidly switched from industrialization to massive urbanization, a faster way to foster local GDP. And this has given free rein to developers to leverage up, hoard land, and overexpand. The state would like to see the property sector turn from seldom cool and mostly hot to the other way around. This requires a fundamental transformation of the nation's economic structure, not just stringent regulations. Bonus fact. Thank you for staying this far. It's now time for the promised bonus fact. A letter circulated online in the last week of August 2020, where Evergrande informed the government of Guangdong province that they were close to running out of cash. The company alleges the letter has been fabricated and is pure defamation, and followed its circulation by a number of public announcements to reduce fears from investors and the public. Question. What do you lovely viewers think about China's economic crisis? Do you think they will recover from this free fall anytime soon? Or is it beyond repair and will collapse completely? Comment down below and let us know your thoughts. If you enjoyed this content, uplift the channel by hitting like, subscribe, and ring the YouTube bell to meet us again in the next video. Until next time.